Hi, this is Anthony Parent of IRSMedic, and thank you for joining me today. We're doing a bit of an update for summer of 2019 of international taxation, and with me are some of our best guests that we have. We have Keith Redmond, who's the global advocate for the American overseas, along with John Richardson, who's one of the best attorneys around, somebody who really has a lot of integrity. He runs Citizen Solutions CA. Great to have you guys. Thank you so much for joining me today.
Thank you for inviting us again.
Right
Most
on.
appreciative.
So
Good
where
to
I want
speak with you.
Right on. So where I want to start off with is the overall status of this bill that sort of, that we're really hoping for, that will give some relief to Americans overseas who are dealing with some of these tax nightmares. The TFFAAA, that is the Tax Fairness for Americans Abroad Act. Is that what it is? Do I have that right?
Yes.
Yeah.
All right.
Yes.
So, so who wants to fill us in on what's going on with that?
Well, I could give a status report, and then John can add anything he would like to add.
So
if that's okay. So
fantastic.
right now, the bill is intact. Okay, it has been written. As many people know, it was introduced at the last minute during last Congress, and it was done strategically just to get it out there, to make some noise about it, knowing full well that Congress was ending. Having said that, the objective is to reintroduce it or introduce it anew in this particular Congress. And what is occurring right now is working on getting Democrat co-sponsors, because it is a Republican Congressman, George Holding, who, with his staff and a key staff member, Matt Strauss, who is the architect of this bill, to give relief to Americans living overseas. So I know Democrats abroad, have been diligent in trying to secure Democrat co-sponsors for this particular bill. The positive note is that we certainly have the backing from a foundational standpoint of Republicans overseas, of Democrats abroad, of American citizens abroad, of ARO, Association of Americans Resident Overseas, for this bill. The Federation of American Women's Club overseas has been silent on it, unfortunately, but the rest of the organizations have been vocal as far as their backing of the bill. So right now, where it stands is to secure Democrat co-sponsors so we can move forward.
That sounds pretty good. So we have bipartisan support, at least from the constituency,
to a certain degree.
Right. What we need to do is get some of those lawmakers to sort of start listening. Both Republicans and Democrats, we all kind of want this. Is now just sort of getting the Democrats to find someone. Any Congress people who look like they might need a little push that maybe we could give a push to? Anyone you know of?
I don't have any names at the forefront of my mind on the Democrats' side. I know Democrats abroad have been targeting some key people, key congressmen who have shown an interest, but nothing that has formally been made public. But I do know for a fact that they have been working on that.
All right, fantastic.
Once I have that information, I know we will be sharing it so people, Americans overseas, especially constituents of these congressmen, congresspeople, I'm not sure the proper term these days, representatives, can actually contact them to support the bill.
All right.
But I think it's also, I think one last thing, I think it's really important for any American overseas to contact their representative to, at the very minimum, inform them and educate them on the bill, and to contact George Holding's office and to specifically contact Matt Strauss to talk about the bill. That's going to be very important.
You know what I'm going to do? I'm going to put, because we have some links on how people can find who their representatives, and so I'm going to put that in the description below this video. And also, Matt Strauss, does it make sense? Well, he's already on our side, so it's good to know he's helping everyone out here. John, do you have anything to add about this?
Yeah, I think I would make a couple of points. The first is to add on to what Keith was saying. I am actually of the view that the most important support for this needs to come from individuals impacted by it. As important as groups like DAACA and that may be, they are groups and they can be seen as 4 groups, 3 groups, something like that. There are millions of Americans abroad. and they really, really need to make their voices heard. I've long been of the opinion that without individual support, loud, vocal, visible support, I think that it's possible to actually snatch defeat from the jaws of victory here. That's the first point. The second point, I think it's important for people to understand what this actually is. What it is simply an enhancement of the Section 911 exclusion in two ways, to make it an unlimited amount of income and to extend it to any foreign source income. So in other words, the theory is that if it's foreign source, it will be excluded, which is extremely helpful. It changes the basic presumption, I think, to the idea that Americans abroad should not be paying tax on foreign source income. That's the good news. The bad news, and I think this is really important for people to understand, is that this is in no way, shape, or form an end to citizenship-based taxation.
Yeah.
It retains citizenship-based taxation. It's simply saying that U.S. citizens living abroad who meet the general 911 requirements will have enhanced amounts of income that can be excluded from the U.S. tax base. But it's a great start. It's extremely important, and it's vital that everybody get behind this.
All right. It sounds like, you know what, I know we all get impatient, and a lot of our clients who have to deal with this, people get impatient, but we have made progress and we're making progress. And I think it's important that we keep the pressure up and not get defeated. The next thing I want to talk about, and we had Monty Silver on this before, about the GILTI tax and the transition tax. So, John, you want to talk about what's going on with GILTI right now? The global intangible low tax income, which is a complete misnomer. It has nothing to do with that.
Right.
Want to give us some updates on what's going on with GILTI? Any help there?
Yeah, sure. Actually, there has been significant help on the GILTI side, also significantly coming directly from U.S. Treasury. In March, the first thing that happened was that Treasury interpreted the meaning of Section 962 to mean that individuals should be entitled to a 50% discount, the same 50% reduction in the definition of GILTI income that corporations have. That was, I think, a very creative move on the part of Treasury, and very, very helpful. Okay, so clearly that would remove, assuming it's GILTI, it removes the amount of GILTI or lowers it by 50%, the amount that would be subject to the GILTI tax. The second thing, which happened in, I guess, June, is, I think, arguably even more significant because Treasury interpreted the statute to actually compel the conclusion that corporate income above a certain rate, above what's generally referred to as the high tax exclusion under the subpart F rules, would not be treated as GILTI income at all.
Oh.
Now this is huge. It's huge, okay? In other words, the thing in March reduced the amount of GILTI income, assuming it's GILTI. This thing in June actually is an exclusion from the definition of GILTI income. And this will help an awful lot of people. Generally speaking, if the corporate tax rate in the country of residence is higher than 18.9%, then my understanding of it is that income could never be GILTI income.
Oh, okay. Yeah, that's helping a lot. Yeah, that's helping a lot. That's great.
So on the transition, on the GILTI tax front, two very, very positive things going forward. On the transition tax, as far as I can see, coming from Treasury, absolutely no movement whatsoever, which really puts many Americans abroad in a position of, do they or do they not turn over their retirement pensions to the IRS?
Yeah.
I suspect a lot of them will not do that, simply because they can't.
Yeah.
And this is quite interesting. I mean, U.S. tax for Americans abroad has been difficult to comply with. the transition tax, hugely and to a smaller extent GILTI, has now made U.S. tax compliance for many Americans abroad simply impossible.
That's the word. That is the word. I would say impossible. It's really, really difficult. Even if you wanted to do it, you're limited on how you actually can access the money to pay this bill.
That's exactly right. And as you know, Anthony, it becomes infinitely more complicated if you have a CFC where not all of the shareholders are U.S. shareholders.
Yeah, right. Exactly. You have a problem, right? You don't have control, but they're calling it a CFC, yet you actually don't control it.
Yeah, it's unbelievable. You know, we have the Monty's lawsuit, which is based largely on procedural grounds. Predictably, Treasury has filed a motion to dismiss based on the usual arguments, standing, et cetera, et cetera. It'll be interesting to see where it goes, but I'm inclined to think that for Americans abroad, the transition tax issue is less a legal issue than it is a practical issue. I mean, the law may be legal. There may be no way to strike it down, but if people can't comply, I don't know what they're going to do about it.
And the IRS's ability to enforce it is also limited too. And, you know, John, you and I have talked about how, some of the biggest victims of this international taxation boondoggle is the IRS itself. It just simply can't keep up with it.
No question about it. I don't even, I would honestly, I actually feel sorry for them. To have this stuff foisted on them. I mean, certain taxpayers, not many of them, but certain taxpayers have access to probably the best tax advisors that money can buy. I don't think it's a general principle the IRS has that. And I'm not being at all critical. It's just so complicated, right? In general has that type of level of expertise on this.
That's right. And it's the compliance costs are so extreme, and it's difficult for the average person to afford the firm that actually can handle it and do it right. And then when it's done right, there's also a bill to pay that the average person could really struggle with.
Well,
Keith,
when it's done right, though, I want to make a point here that when it's done right, it may be done wrong. Okay. I mean, it's not as if there's 100% agreement on
right. That's true. And that's true. That is absolutely true. We find balances with our clients to say, well, this is one way we could do it. Here's a risk. Here's the other way. I mean, international taxation is probably one of the grayest areas of a gray area of law. Taxation itself is a gray area of law. Now you throw this international aspect to it, and it's just really so nuanced, and it does depend on sort of many things on what our clients want to do. Keith, what did you want to add?
Yeah, I just want to add something because I'm going to state something a bit provocative here because this is a very good example of the situation. Is that, think about it, it's the individuals, the Americans overseas who have small to medium-sized businesses who have been U.S. tax compliant, who have been given the shaft when it comes to the transition tax and GILTI. Those Americans overseas with small to medium-sized businesses who have not entered the U.S. tax system are breathing a sigh of relief and are very thankful that they have not done so. So this is just an example of a situation where it's best to not even enter the U.S. tax system than to do so because, case in point, you get punished.
Absolutely. Keith, over the years, and I know you've talked to hundreds, thousands, and John, I'm sure you have talked to hundreds and thousands as well. And I've talked to people who've owned businesses around the world with significant assets, we're talking tens of millions, hundreds of millions of dollars. And they wanted to know, okay, what happens if I do disclose? So many of them that I've talked to have not. They just haven't. And nothing has happened to them. Nothing. And they're reading things online that are scaring them to death, yet they know the reality. Nothing has happened. And so we have a very, very perverse incentives where the people who raise their hand and say, yes, I want to be in compliance and do the right thing, they get hammered the hardest. And that's really something that should change.
Anthony, it's fairly, at least this is my view, and a fairly strongly held view, that when people file their first U.S. tax return, it's the first step to renouncing U.S. citizenship. There is, as far as I can see, almost no possibility anymore a U.S. citizen living overseas, who has a pension or wants to do any investing, I don't think they can remain American citizens. And this whole transition tax and GILTI thing to a lesser extent, the transition tax, in all fairness and objectivity, it's really the retroactive confiscation of assets.
Correct. Yes.
And when people see this going on, I think it's very difficult for me to imagine that they are going to come into compliance because they've seen what happens to those who do.
Yeah, and I would say it would be the definition of a post facto law. You've changed what income is based on what someone did in the past, and it's kind of but good luck with that lawsuit. It's just the IRS, the Treasury fights mostly everything tooth and nail, and by the way, and GILTI and transition tax, these were all things about the 2017 Tax Cuts and Jobs Act. This is really a Republican problem they created. I'm saying that as a fellow Republican as well. This really should be fixed because they really, really made a big mess of things. And it would be nice if everyone could work together to sort of fix the problems that were created. I do want to move on to something that we've been coming across, Form 3520A. Some of the penalties that are going on now, John. You wanted to talk about something with this that's going on. What's that?
Yeah, if you go over to the Tax Connections blog, a man named Gary Carter wrote a very interesting post, which is up there, and I commend it to all of you. And it's really his description of how his clients who had filed 3520s. Now, of course, as you know, Anthony, once a 3520 is filed, there's an expectation of a 3520A in some way, shape, or form.
Mm-hmm, yeah.
And these people are being penalized for late filing, as if I understand it, the 3520A. When they weren't filing the 3520A, what they were doing was attaching a statement to the 3520, which, as you know, they're allowed to do if the trust itself is not willing to file the form.
Right, you could do that. Right, the trustee doesn't have to file it. You could elect to file it for your trustee.
Yeah. So if you look at this post, and I put up a comment on it, which summarizes to some extent, my view on this. I think that one of the problems with this is that very few, if any, tax advisors really understand what a trust is for IRS purposes. And most of these things are not trusts to begin with.
They're really not.
And, there are many tax advisors who sort of take the position, well, we don't know if it's a trust, so why don't we file the 3520? Well, that is a huge, huge mistake, as this penalty, this list of penalties going out demonstrates. Because once you file the 3520, you've opened the door to penalties. So I think that people need to think long and hard and be very careful that their situation really fits the definitional requirements of these forms to file them at all. And I would say the same thing for the 5471, because, if you look at the entity classification rules, the fact that something is a corporation under in another country does not make it a corporation under U.S. law.
That's right. It's not.
So, I think that people need to be very, very careful. And I'm also inclined to think that this whole expat international tax compliance thing, I think that people should have to have a specific license, to even advise in this area at all. Because, so many people because they don't know, and, they can't know because it's not like there's a list of these things out there, they over comply.
Yes.
And over compliance opens
is a risk.
Door to penalties. So the theme here, Anthony, and we ought to do a podcast on this one day, which we will call defensible compliance. What does it mean in the context of Americans abroad? Because you can't go too far. Look at what's happening to these people.
And, that's such a common thing. We wanted people to say, well, I talked to so-and-so, and they said, we got to be really conservative and file all this, this, and this. And we're telling them, like, okay, look, maybe they're looking to create more work. Maybe, I don't know. I'm not going to get into that. But what I'm telling you is they're opening up the door to the IRS to hammer you. So you want to make sure when you're actually filing something, it's no more than actually is required. And there's actually even on a Form 5471, on these forms, you could actually be substantially incomplete by putting too much information in. And I haven't seen it in action yet, but you never know. Now, a lot of these penalties, too, are automatically assessed. It's something that happens, and we've seen it with our clients. We'll file something, and we warn them, hey, you might get a letter with an automatic assessment. We sort of have our strategy in place. We assume the IRS is going to do that because they can't figure out actually when a 3520 is required, when a 3520A is required, when both are required, when neither are required. Don't expect the IRS to know. Don't expect that you can actually call anyone to actually get that answer. No, there's no way.
And you cannot get the answer by calling up, your local tax preparer either.
No. And I would even,
what it does is it changes the definition of being conservative. What this demonstrates, conservative does not mean filing everything to be careful. What it means is avoiding filing anything unless it's absolutely necessary.
That's right. Exactly correct. That's absolutely right. Do not overfile. And I would say this, I see a lot of questions on expat forms, people asking tax questions, and I'm just shaking my head. It's like you don't know. And people are giving answers as if they are so sure. And it's just, there's so many moving parts to things in order so that you don't file anything more than you need to. And here's something still going on, and it's breaking my heart that we're having a lot of the people in the tax professions who are still forcing people into that full offshore voluntary disclosure program that's so inappropriate unless you have, serious criminal liability. And if it's that serious, it's probably not going to help you anyway. So it's just something you got to really think. And when you have someone who's forcing you to sign something, that closing agreement, that 906, that has a massive penalty, and we have run into this, and it just absolutely infuriates me that so many tax advisors don't care about you. The fact that you're going to throw away so much of your fortune while they get paid for pretty much shuffling paperwork and not doing their job, you got to really watch out for that. If someone is telling you to sign something that just doesn't seem right, I'd say give me or John a call. We could really sort of set you in the right direction. And also, Keith is really good because he can say things that I can't say. And I really appreciate that. I want to move on to go ahead, Keith.
No, I just want to concur with what you just said, Anthony, because I have dealt with a lot of Americans overseas, many Americans overseas, who have told me that their tax accountant or tax lawyer has entered them into the offshore voluntary disclosure program. And I tell them, stop, do not use them anymore.
Yes, get away. Get away.
It's not the program for you. They are not serving your interests whatsoever.
Mm-hmm.
Yeah, just one last comment on this. The offshore voluntary disclosure program is over. Okay, what has replaced it is guidelines for more traditional voluntary disclosure. The point that I would make in these guidelines is that the IRS is making it very, very clear that unless it's criminal behavior, they don't want you in those programs.
That's right. Yeah.
So hopefully, this is a problem that would take care of itself.
But these advisors are still doing it. The IRS, and the IRS has been telling us for years, we really only want people with actual criminal exposure. Yet, again and again, these so-called professionals are forcing their clients into this over-compliance nightmare. And once you're in that practice, you can't use that streamlined program. You can't really get out of it. You have gone and you got to really think hard. It is appropriate I could think maybe of a handful of people in this world would benefit from it, but we're really not talking about that much. The people really look at other things that are more simple, more straightforward, nothing more than what you need.
Anthony, obviously all of our thinking, has evolved on this over the years, but unless somebody has deliberately messed something up in the past, right? I think that the first question with this stuff perhaps is, do we do anything about the past, right? It's not as if, there's some rule that says, if you honestly did the best you could and, there was a mistake made that you have to go back and fix it. And it's often the attempt to fix these things that cause the problems. We're definitely in an era, I believe, where less is more. You do as little as possible, and minimal compliance is the gold standard. Would you agree with that, Anthony?
And I would say that, and also whatever you're doing, make sure it's right. So you do the minimum, but you also make sure that you're not leaving anything else there. And I'm sure you've seen sloppy work all over the place. People just slapping things together, assuming this is just like some sort of tax return H&R Block could file, right? Assuming that, like, if I had 10 hours of training and I kind of do this, I do tax returns all the time. I do thousands of tax returns a year. I can handle this, no problem. You got to get rid of that mindset. That's not this at all. It's completely different. You have to be very specialized in this. And also, I think you got to see what's actually happening in real time. When you file something, what happens? When the IRS does this, what happens? You need to know someone kind of on the inside that sees what the IRS is actually up to. And unfortunately, there's just way too many people out there who are looking to exploit people. And I'm not really all that thrilled about that. It's really, really unfortunate. Now, then I want to move on. Yeah, go ahead.
One cap on this, okay? There may be some out there who want to exploit, but the bigger problem is they all want to protect themselves, okay? They don't want to be accused of having made a mistake. I think that's the bigger problem.
And they don't want to be advocates because they're more concerned about advocating for themselves with that protection than actually earning what they're paid. People are paying big money. Well, you got to earn that then, right? So it's really.
Well,
really,
you know what? Let's move on to the next topic.
Yeah. So actually, we're gonna get too depressed sometimes. So Keith, what's going on? Accidental Americans in France and the U.S. and I know there's stuff going on in Canada too. John, you might probably handle that. But Keith, you want to talk about what's going on in Europe?
Sure. Well, since the last time we spoke, a couple of things have occurred. The French Commission that took a look at the situation of accidental Americans and dual nationals in France issued a report stating that it is indeed a serious issue vis-a-vis bank account closures as a result of FATCA, the Foreign Account Tax Compliance Act, and the situation of them with the U.S. imposing its tax code on French tax residents, specifically those who have zero tie to the United States, aside from, quote unquote, the unfortunate life event of being born in the U.S. And it was quite a robust investigation, if you will, and report that has come out that at the end of the day, the result is that the French government is starting to push back on the United States in regards to giving relief to not only accidental Americans in the first instance, but also dual French-American nationals who live in France. Also, they want to address the breach of the intergovernmental agreement, the IGA, where the United States is not reciprocating in the same fashion as the French tax authorities are supposed to do under the FATCA IGA. So more to come on that particular initiative. The next initiative is that there is a French FATCA lawsuit. It was heard in front of the Conseil d'État, which is the equivalent of the U.S. Supreme Court, on July 5th. And a ruling will be rendered at the end of July. And the basic premise of that particular lawsuit is taking a look at the violation of privacy rights as it is outlined in the French Constitution, as well as the discriminatory practices of the French financial institutions as it relates to FATCA. So
that's going to be exciting.
More to come on that. And it's getting a lot of press. That's France. The Netherlands sent another delegation to Washington, just like France did, to meet with the IRS and the Department of Treasury and key individuals in Congress to address the exact same issues as it pertains to accidental Americans and dual nationals in the Netherlands. So there is momentum, and it's going to be important that that momentum continues to grow and the pushback outside the United States toward the United States continues to become more and more robust and serious.
Fantastic. All right. Now, John, what's going on in Canada? We have anything going on there?
Well, I'd like to say that the pushback against the United States from the Canadian government mirrors what I just understood Keith to say about France, but it doesn't. Actually, the Canadian government wants to do everything it can to help the United States impose worldwide taxation on its citizens and residents. Yes, which leads it to individuals like the Alliance for the Defense of Canadian Sovereignty, of which I am the co-chair, to actually launch and, run these lawsuits. And yes, I'm pleased to report that, we have successfully launched a lawsuit against the government of Canada. The hearing took place at the end of January. We're still waiting for a decision on that, which doesn't surprise me particularly. The basics of the lawsuit is that the intergovernmental agreement signed by the government of Canada is in violation of Canada's constitution for reasons of unreasonable search and seizure, breach of equal protection, equality rights, etc., etc. In any case, we're waiting for a decision on that, but it really doesn't matter because whoever loses is definitely going to be appealed, as the judge, Justice Ann McTavish, commented during the trial itself. She said something to the effect of, she is just a speed bump to the Supreme Court of Canada, where I believe this is going. So the bad news is the Canadian government is very interested in helping the United States absolutely turn Canadian citizens over to the IRS. That's the bad news. The good news is that we've got the lawsuit going, but it is going to take a good bit of time.
Well, speaking of lawsuits, and I think this is something helpful for people to understand really what you're up against too. This is a case I commented on last year. It was the Echel case in France. And basically, This is what it is. The Echels are a couple, and they're paying Social Security, which is a tax. Just like in the U.S., we have our Social Security we pay. It goes on your 1040. Most people don't know that. You never write a check to the Social Security Administration. It's just the IRS collects it. So what happened was that the Echels said, hey, you know what? I'm paying this foreign tax. I really should get this as a credit for what I'm paying. Well, the IRS sort of, and this is my commentary on them, fought them tooth and nail, that it had to go to tax court. They were like, no, we're not going to let you do this. The judge says, well, let's see what France says about this, whether or not this tax is actually a tax. Now, Keith, maybe you could take off the let it, because I think you're pretty familiar with what happened. So what happened next after that?
Well, just to clarify, these two taxes, and I call them taxes because they in the French language, they are called French social charges, but they are mandatory. They are mandatory that if you are a French tax resident, you have to pay. Therefore, they are a tax. And so, like you said, foreign tax credit could not apply. So as a result, you had a number of people who were making over the foreign earned income exclusion who could not apply that tax credit. Therefore, they were significantly doubly taxed. We're talking tens of thousands of dollars. So as you said, the tax court pushed it back onto the IRS and said, you figure it out. You figure it out. This is a tax. You guys need to figure it out. And just a couple of weeks ago, the IRS conceded that, yes, indeed, it is a tax. And so they are going to have to go back and reimburse all these individuals who have paid these taxes, who have been doubly taxed. And we're talking tens of millions of dollars.
Absolutely.
And what the sad part of this is that there have been a number of Americans living in France as a result of this who just couldn't wait because they were paying $50,000 to $60,000 to $70,000 to the IRS for nothing, and they had no choice but to reluctantly, begrudgingly renounce their U.S. citizenship. I can't tell you how many people I have spoken to who have cried over this because they did not want to do this, but their family had to come first. And so it's great that the IRS has conceded, but the damage has been done for so many people.
It is just, What's up, John? What do you have to add?
Let me just add a couple of things to this, okay? What I think this case really is about, in 2016, the D.C. Court of Appeals dealt with the issue, and the issue before the court really was under the France-U.S. tax treaty, whether these social taxes qualified as income taxes, because if they did, then they would have been used as credits against the U.S. tax liability. And basically, the IRS lost at that level. It's extremely significant because the judge had a lot to say about the interpretation of these tax treaties. And what's really significant was that the bottom line of the decision, if you will, is that one, the IRS can't unilaterally interpret a tax treaty and make that interpretation binding on another country. And secondly, in interpreting the tax treaty, the United States has to look to the intent of the treaty and how the other country might expect such and such a tax to be characterized. So this is actually a decision that goes way beyond the Eshel situation specifically, because really it's important because of the rules that it lays out for how to interpret tax treaties in general. Now, for tax advisors, I think that what the bottom line is that if you want to know what the tax treaty means, I think it's interesting to know the IRS view on it, but the IRS view on it is not binding.
That's right. I want to finish up with one thing Keith and I were talking about. It's sort of like a paradigm change to the mindset of all of us. So, Keith, what do you mean by that? We need to change our mindset. What do you mean by that?
Well, again, at the risk of being provocative, I think there does need to be a paradigm shift when it comes to Americans overseas in general and American overseas organizations in general, and how are they representing themselves as well as their constituents. And I'm not talking politics here. I am just talking about putting American overseas issues first and being extremely transparent on the issues that are on the table, whether that be issues that have to do with renunciation, issues that have to do with, because of this situation, you have Americans overseas who are hiding their U.S. nationality so they can live normal lives and so they can have bank accounts, and that the entire, from soup to nuts, damage and discrimination that's being done is at the forefront, and that all American overseas organizations must put this at the forefront, and they need to put it at the forefront in front of any homeland American issues, because if they don't, nobody else is going to advocate for them. Homeland American issues have to become secondary or tertiary until this situation, which is a very serious situation, is resolved. And that across the board has to be the focus. And there needs to be more outrage and more vocalization from the American overseas community at large. This is why, last point, why Fabien Laagra and Accidental Americans in France are making significant headway, because they have a singular focus. Singular focus to get this resolved. And Americans overseas, put aside whether you're Republican or Democrat or independent or not affiliated or whatever, it does not matter until these American overseas issues are resolved. And that goes for all of the American overseas organizations. They all should be advocating for change and to cease the U.S. imposing its tax code on tax residents of other countries. Full stop.
Keith, so well said. Because when I'm looking at posts and I see people insert things about what they think a domestic U.S. policy should be on healthcare, immigration, can I just tell you to shut up? Seriously, shut up, because you're alienating the people you need on your side. Keep that out of it. Number one focus is ending this tyranny. This is so bad. Stop. Whatever's going on domestically in the U.S. doesn't affect you. Leave it alone. Focus on this. This is destroying you. And by the way, I run into people who will say, the tax system is fine. There's nothing wrong with it at all. Yeah, it's interesting. They're not in compliance with it. This thing they're saying is so wonderful and isn't all that bad. They don't bother complying with it. So it's really, really kind of obnoxious when people can't focus on what actually is important here, and they have to go back to their tribal mentality. Well, that tribe is going to kill you. That tribe is going to lead you back to exactly where we are, where we're fighting against each other and not working together to end something that any rational human being would say is completely absurd, complete invasion of privacy, everything wrong. It's not about revenue, guys. This is not about revenue. This is about control and ruining people's lives, and we have to have enough of it. Now, with that, I think I want to finish.
And one last point one last point I would like to interject, Anthony, and then I'll leave it at that, is that, you know, a lot of these American overseas organizations in their own right are trying to do the best they can, and I respect that. And going to Washington and meeting with their congressmen and senators and so forth and the IRS and the Department of Treasury, that's a good thing. But doing it once a year and then letting it go and nothing happens until the next year will not solve the problem.
No, it will not.
It has to be done on a consistent basis when you're representing an American overseas organization.
Get on them and stay on them. Now, we're running out of time right now, so I want to leave there. We're going to put some links in the description. Look for the links on the webpage. We're going to show you where you can go to contact your representative. We're going to go through some of these other things. If you're concerned, if you're not sure exactly what we're talking about, some of these issues, we'll sort of give you some summaries there too, so that you can take the action you need so that we don't have the world's absolute worst taxing system. And really, it is the absolute worst once you actually know what it is. This is Anthony Parent of IRSMedic. Thanks so much to Keith Redmond and John Richardson for joining us today. Be sure to subscribe. We're going to have that update of that big case in France and some of these other litigations. Again, thanks for watching.